Good morning and welcome to Greaves Cotton Limited Q4 and FY24 earnings conference call. From the management, we have with us Dr. Arup Basu, Managing Director, GCL, Ms. Akhila Balachandra, Group CFO, GCL, Mr. Atinder Basu, Group General Counsel and Company Secretary, Mr. Nagesh Basavanhalli, Non-Executive Vice Chairman, GCL, Mr. Narasimha Jayakumar, CEO, Greaves Retail, Mr. Chandrasekhar Tyagarajan, CFO, GEMPL, Mr. Varghese Thomas, Chief Communication Officer, GCL, Mr. K. Vijayakumar, ED and CEO, Greaves Electric Mobility. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Nagesh Basavanhalli, Non-Executive Vice Chairman of Greaves Cotton Limited. Thank you and over to you, sir.
Good morning, everybody. Nagesh Basavanhalli here. Very glad to be here. Welcome to the Greaves Cotton Q4 analyst call and hope you're having a great day today. Our transformation journey from diesel engines to a multifaceted organization, embracing a fuel-agnostic approach and getting closer to the customer, the journey that we started a few years ago, I think is beginning to bear fruits. The company's performance over the last quarter underscores the resilience of our diversification strategy. Collaborating with Excel Control Linkage, our newest entity that we acquired, has unlocked new capabilities and growth for Greaves Engineering both in India and abroad. Our evolution from a B2B diesel engine only company to a B2B plus B2C has been fueled by the robustness of the strategy. This has been pivotal in installing confidence as we go forward. I want to take this opportunity to ask the CFO to come in and then the CEOs to come in and talk about their business in more detail. Over to you, Akhila. Ms. Akhila Balachandra will discuss the financial performance. Thank you.
Thank you, Nagesh, and good morning, everyone. Like Nagesh mentioned, we have had a very good financial performance this year, and we are happy to report our full year financials today. On a standalone basis, revenue for Greaves Cotton stood at 1,779 crores, a growth of 15% year-on-year. Our newest acquisition, Excel, revenue stands at 263 crores on a full year basis, a growth of 41% year-on-year with robust margins of 31%. Our engineering and retail businesses both registered double-digit growths of 17% and 10% respectively. And like I mentioned, Excel's acquisition has proven value accretive with a first-year growth of 41% year-on-year. Almost one-third of Excel's revenues are from the export market, and this has really helped us to grow efficiently. Greaves Electric Mobility's revenue stands at 612 crores with a strong focus on new product launches and a path to profitability. Coming to margins, standalone EBITDA for financial year FY24 stood at 232 crores vis-a-vis 151 crores last year same period, a growth of 53% year-on-year. This has also been helped by extremely good margins at 13% an improvement of 325 basis points compared to last year's 9.77%. And if I were to look at the GCL plus Excel at a combined entity, the EBITDA is 309 crores with the margins at a healthy 15.2%. As I mentioned earlier in both our earlier earnings presentations, this has put us back on track to our historical trend of 13 to 15% EBITDA margins. Here I would also like to emphasize that we continue on our EBITDA improvement journey. On a standalone basis, our profits were a decadal high. Our PBT was a decadal high of 366 crores. Along with the margin improvement journey, we've also focused on working capital management, and this has ensured that our ROCE stands at a healthy 50% plus. In terms of balance sheet strength, the company continues to have an almost zero debt and standalone cash of 500 plus crores, which will be used for further expansion and investment as we go forward. Given the healthy performance of the company, the board has proposed a final dividend of 100%. Looking forward, we remain steadfast in our commitment to our growth and transformation journey. We are confident that our strong foundation and unwavering commitment to excellence will sustain our success in the forthcoming quarters and the exciting opportunities the future holds. One area where we had seen a lot of pressure in the early parts of the last year was overall commodity cycle. I'm happy to note that the commodity cycle has been soft in this current financial year and had a very positive impact and will continue to do so going forward. We are also continuously monitoring and evaluating the current geopolitical situation and its risk impact. However, we continue our internal endeavors in our profit improvement journey. With this, I invite Dr. Arup to share his remarks on the engineering business. Over to you, Arup.
Thank you, Akhila. Good morning, ladies and gentlemen. My commentary is on the performance of the engineering business, that is Greaves engines and Excel control linkage. In FY24, the revenue of Greaves engines grew 17%, as Akhila said. We continue to make good progress on our ongoing program to build a future-ready, energy-flexible portfolio to gradually wean us from a dependence on demand for diesel engines. As I mentioned during previous analyst calls on 8th November 2023 and again on 8th February 2024, the IC engine and genset portfolio is being augmented with greener fuel-agnostic variants that can use CNG and biodiesel and ethanol blended fuels. In addition, we have commenced sales of engine components. These products utilize our current manufacturing assets and are helping us maximize value from our manufacturing infrastructure and equipment. Additionally, as these products rely on our existing domain expertise in precision manufacturing, the business can grow relatively rapidly. Simultaneously, we are increasing share of exports in our total revenue. In FY24, exports accounted for about 12.5% of total revenue. Our exports are relatively evenly distributed across the USA, European Union, and the rest of the world. This diversification is intentional as a form of geographic risk mitigation. The integration with Excel control linkage has moved to the next stage with initiation of cross-selling products and services. We are continuing to augment our prevailing domain depth in mechanical engineering with mechatronics and electronics. The latter will also help support the growth of electronic sensors. Overall, the prevailing tailwinds in the economy and the manufacturing ecosystem in general Our geographically diverse customer base, our complementary platform technologies and application areas, combined with our brand Greaves, makes us optimistic about the future. Thank you. I now hand over to my colleague Narasimha Jaikumar. Over to you, Narasimha.
Good morning, ladies and gentlemen. This is Narasimha Jaikumar. I'm the CEO of Greaves Retail. Very pleased to be here to present to you the business commentary for Q4 and also for the full financial year. Greaves Retail had pretty strong revenue growth in Q4 with 27% year-on-year increase. Full year revenue increased by 10% Y-on-Y. The revenue was 162 crores for Q4 and for the full year was 588 crores, to the growth of 10%. Highlight was also the overall, 120, almost 120 bits of margin improvement overall compared to last year. Just on the business itself, as you probably know, Greaves Retail continues to be amongst the top 3 aftermarket companies in India catering to the small commercial vehicle segment, which spans 3-wheelers, electric 3-wheelers, and small commercial vehicles. During the course of the year, we've expanded our business operations significantly in sales distribution going across various vehicle segments. The network now spans both domestic and international markets. We've also in Q4 done a major part line expansion to include electric vehicle parts like motors, controllers, batteries, and so on, which targets the growing e-rickshaw market in the country, and also in general on the electrification side. We have our digital initiatives, which I touched on in the previous analyst call, is now really bearing fruit and is proving to be a moat for the business. We have scaled up our Greaves Upar mechanic loyalty program quite significantly. We now almost touch 20,000 mechanics, and we have over 5,000 active scanning mechanics on a daily basis. This has led to good secondary sales and good retention of customers for us. Our Greaves Care outlets, which are essentially franchisee-owned, franchisee-operated, have now touched almost 138 billing outlets in the country, which are a good sort of independent standalone spares consumption channels for us. And they also do multi-brand service outlets catering to both electric 3-wheelers and 3-wheelers. We've also, on the institutional customer side, acquired additional customers in the railway business for our genset spares and services. We've expanded our presence into new railway zones. Last but not least, our part lines now also include construction equipment parts, catering to the growing construction equipment industry in India. This is on the beachhead of Excel's own product portfolio for us. So overall, it has been a very good quarter and a year. We're very optimistic about the future. Thank you. And now I would like to hand over to my colleague, Mr. K. Vijay Kumar, CEO of Greaves Electric Mobility Private Limited.
Very good morning, ladies and gentlemen. Very happy to be here taking you through the performance of Greaves Electric Mobility for Q4. And so in Q4, our total two-wheeler sales was 8,448 units. Our three-wheeler sales was 2,579. In total, for Q4, we did 11,527 to be precise, and we closed the year at 61,000 total units of two-wheeler and three-wheeler together. As an organization, as you are all aware, we are waiting for our subsidy approvals, for which we have completed all our part of commitments to the Government of India, and we are waiting for the final approvals in terms of getting back onto the portal. The most important and significant information from our side is on the new product development. We are happy to share that we launched our most awaited technology marvel. We call it the next big thing. The product named as Nexus into the market to the press fraternity as well as to our complete dealership network this month. And it has been received very, very well in terms of overall response. I would like to spend few minutes on explaining that. It comes with a very innovative, groundbreaking features, innovation which has been built into it, that it has the first time a very multi-patented hybrid swing arm which has a twin suspension. Basically, it's a two-stage hybrid architecture which isolates the wheel shocks from the best of the NVH performance which we see in the today's two-wheeler market. Very effective belt protection system which gives it the 5x durability. So if you see from a two-wheeler perspective in terms of ride comfort, in terms of durability, and it has been designed and developed in India by a very, I would say, different theme which we based it on the Arctic tern. It's a bird which has motivated us to design that product. So it has smart fit body panels, which is the first time again in India where there are no visible hard mounting. So modular body panels for e-serviceability. We are launching this first time around with the safest LFP battery. There, as you are aware, it has a much better, excellent energy chemistry, 30% better cycle life, which gives it, from a TCO perspective, in terms of better durability and life. Unique thermal flow cooling architecture is what we have innovated this time, where the wind flow as the vehicle travels, and from the front to the rear vents, it's so aesthetically designed, but at the same time the lowers gives and reduces the heat on the battery side. So I will not get into very large details of the product, but it's been an innovation which has been acknowledged by the media, acknowledged by our partners, and we are our own way where it is expected to be really successful. Is what our expectations. On the dealer, partner, and the supplier side, they are really motivated. We are seeing an uptick in terms of their response to the product as well as to the overall outlook towards this financial year. Coming to the three-wheeler business, last quarter we had released our electric three-wheeler called Electra. It is now gaining traction in terms of visibility. We are going in stage phases launching the product. We started off from South India. Now we are entering Uttar Pradesh in a very big way. And we see a lot of green shoots on the electric three-wheeler also. So that's an overview of overall from Greaves electric mobility side. And thank you to be on the call. Over to Greaves, please.
Let's open it up for questions. I hand it back to the moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to only use handsets while asking a question. In the interest of time and fairness to all participants, each participant will be allowed one question and a supplementary question if needed. If participants still have more questions, they can join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashin from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is regarding margins in the engines business and in the aftermarket business. So despite, decent growth on a sequential basis, margins in both the business have reduced significantly. So could you please help us understand what were the reasons behind that?
Akila?
Yeah. Thanks for this question. So essentially, if you realize, we have been going through a margin improvement journey, and over the last 8 quarters, both our margins in both the engines business as well as the retail business have constantly been improving. There are cyclical impacts. There will be some seasonality to it, but the North Star goal and target has been to move back to the 13% plus range. And on a yearly basis, if you see, we have come back to what we were in the pre-COVID days. I would not put too much significance into the quarter 4 because I said there will be a business mix, there will be product mix issue coming and playing in. But overall, if I were to take on a yearly basis and also on a 8-quarter basis, we have been able to do a robust improvement journey.
My second question is on the e-mobility business. With this FAME 2 subsidy almost ending, could you help us understand where are we qualified for the PLI scheme?
So thank you so much for the question. So as I mentioned in my speech, we have completed all formalities from our side, and we are awaiting approvals from the Government of India.
Yeah, and additionally, a question on PLI. We are not part of the PLI scheme. Back on the FAME and the EMPS, as you know, the FAME gave way to the EMPS scheme up to 31st July. And we are waiting information on what happens beyond that date. Back on the PLI for just a moment, the supplier auto component PLI, we believe that with working with our suppliers, we should be able to get the price advantage coming from the PLI scheme that will through market forces be passed on to us by suppliers.
And the third question is regarding the group.
I request you to rejoin the queue for your follow-up question. Yeah. Thank you. The next question is from the line of Neeraj Katemkar from Prosper Tree. Please go ahead.
Thanks for the opportunity, madam. My question is related to the standalone business. It's we used to sell the 290,000 units, engine units in the FY20, and now the company is producing the fuel agnostic machine. But our total sale is 88,846 units for the FY24. Can we reach the FY20 level, and how we will reach to that level?
So this is Arup. Maybe I can try and respond to that. So what you've indicated is the auto engine sales for diesel engines. As I mentioned, we are now building a portfolio which will have diesel as well as CNG, as well as going forward electric. That's part of the plan. And when we look at engine sales, auto is one angle. The other applications are in the non-automotive applications, for example, pumps, etc. There also we have had just under 50,000 engines sales. So our total engine sales is 136,000. There is a pattern shift in three-wheelers, where earlier there was essentially diesel-based three-wheelers, and now it's diesel plus CNG plus electric. So the whole pie is changing. Three-wheeler industry is growing significantly. So we will be playing in the growing market of three-wheelers. Thank you.
Yes, but I think the FY20, the number of units sold was 290,000, and we are half the mark, 136,000 in FY24. Can we even reach to 2 lakhs mark?
See, there are two things that happened from that time. There was a COVID, which pretty much had a significantly adverse impact on last mile mobility because of the lockdowns, etc. And combined with that, there was a lot of pushback against diesel-based three-wheeler applications. In many parts of India, there were diesel bans and so on. So what will happen is the three-wheeler industry is growing again, it will grow. And our portfolio and our participation in the three-wheeler industry will grow. The fuel mix will be determined by many other parameters, not by us. And that's the reason why we have put our efforts to create a portfolio that is energy agnostic. So whether it's CNG, whether it's diesel, or whether it's electric, we'll be playing in the entire range. Thank you.
Okay. And sir, my last question. Recently we launched the Nexus in the EV. But is it without the eligibility of the subsidy or with the subsidy we have launched?
Yes, thank you for the question. So presently what we have launched Nexus is without the subsidy built into it. So we are focusing more on innovation and we are focusing more on, building efficiency in our supply chain and our cost of goods purchased and things like that. So to answer your question, it's presently without subsidy.
But if the subsidy is allowed, then the difference will be around 10,000 rupees as per the new guideline?
Yes, please.
Hello?
Yes, the difference will be around 10,000 rupees.
Okay, and if permit me the last question, that the other expense at the standalone level has increased from 44 crore on a quarter basis to 57 crore rupees. What is is there any specific reason for the such hike in the other expenses?
Yeah. So let me take that. Essentially, other expenses includes a lot of variable and manufacturing overheads. So if you see the growth from quarter 3 to quarter 4, that has also been significant, and a majority of the increase is on account of the directly variable expenses.
But ma'am, the revenue has grown by 10% and expense by more than the 20%.
That is correct. As I said, there will be various components of the variable expenses, and this has grown in proportion to the overall growth in the business.
So for our model purpose, will it be a 57 will be the base expense?
Sorry to interrupt, Nivek. I request you to rejoin the queue. Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We request you to limit your questions to 2 per participant. The next question is from the line of Chandra Chodamani from Prime Invest. Please go ahead.
Am I audible?
Yes, sir.
Yeah, so my question is on EV business. Okay, so after the unfortunate set of events in the last 2 years, you had burned a lot of cash, and if I understand correctly, you are left with 200 to 250 crores in the EV division cash. So a pre-related question. So how is your PE investor viewing this situation, that is this kind of cash burn and all? Second, how you are able to manage your dealership ecosystem with such a slump in sales volume? And third is, on a 3-year basis, would you require additional cash in this business or additional fundraising, or you will be able to manage with whatever is left? These are my 3 questions.
Yeah, I'll take the question number 1 and 3, and I'll request Vijay to answer the question number 2. This is Chandrasekhar here. On the view of our strategic investor, they're part of our board, they're part of the decision-making process at the leadership level, and they're fully supportive of the of the trajectory that we're taking as a business, right? On your third question, regarding funding, you may have already seen the general announcement that went yesterday. The board of the company has been discussing, deliberating the various options for raising funds in Greaves electric mobility, and we will come out with more information as and when it is available.
This is Vijay Kumar. I'll address your second question. So on a distribution standpoint, we have more than 400 partners in the country. And post this launch and repricing of our present models, which we have done, which is the Magnus and the Rio, there is a very good positive uptake, and you will be able to see that momentum building in the quarters to come.
Thank you, sir.
Thank you. The next question is from the line of Bhavesh Patel from Patel Investments. Please go ahead.
Thank you for the opportunity and, good set of improvement overall. My question is regarding the fundraising plan that you touched upon. It is in both Greaves Electric Mobility as well as Greaves Finance. And one of the option is IPO and that option as well. So if you can give some more color to that in terms of what is the overall thinking. And the second question is there any likelihood that we might get back the subsidy that we paid to the government in the good faith, knowing that one of the competitors probably got the money, and I could be wrong on that, but would like to know your views on those. Thank you.
I think we've lost the electric mobility team, but just to come in, the board has announced that they will look at all options, and I think it's quite the release that was sent out, and the CFO touched upon it, right? So as and when we have more information on what those funding options are and the timing, I think we'll share more. Regards the second thing, I think the CEO touched upon the point that we have done everything from our side. We're waiting for the confirmation from the department on the subsidy next steps. So we are waiting. We've done everything in our control, and we're waiting for the response. Thank you. Next question.
Sure. In fact, on that, you were saying next step is one, but is there a likelihood of us getting back the money that we provisioned in the last quarter?
So that's what I'm saying. Let's wait for the department to get back, right? Otherwise, we're all getting.
Okay. Yeah. Thank you and best wishes. And I hope, of greater performance going ahead. Thank you.
Sorry. Hi, this is the Bangalore office. We got disconnected for the moment. Can you please repeat the question again?
We got the answer, so thank you for that.
Fair enough.
Bhavesh?
Yes, I have the answers to the questions I had, so thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Dipanshu Agarwal from Quants Analyst LLP. Please go ahead.
Hi, everyone. So my question is more on the overall performance of the company. Now, if I look at the price movement of the company, I think from quite few years there hasn't been any change. Even with Greaves Electric Mobility getting into the picture, still as an investor, one has not been able to get any upside. How is the company looking into the investor relationship? And what are the plans to improve the performance? Any view on that?
Can you repeat the question? It was not very clear, please.
Okay. So I'm saying from last few years, the share price movement has been a little more stagnant, even with Greaves Electric Mobility coming in, and there's a lot of news of competitor going into IPO, yet our share price performance has almost been stagnant. So just wanted to get your view, and is there any plan of having any investor relationship activity being done to probably make an improvement in the share price?
Sure. We have, over the last couple of years, as you know, undertaken a transformation journey at the Greaves overall group. We are moving away from a single product, diesel engine company, to investments in fuel agnostic, mixed fuels, multi-fuels technologies. This is a journey that will be of continuous nature and over the next few years. One of our major investments has been in the Greaves electric mobility, which had done extremely well in the last financial year, as you're aware. This year, with the issues coming from MHI, we have faced a lot of turbulent times. As you're also aware, on our part, we have paid up the demands of the government and are awaiting next steps from their side. We believe that on the other, Greaves Cotton, the parent company, has also done its own share of good work, and our standalone results are, reflecting the journey and that we have undertaken at our end. We believe that this is an ongoing journey. The company is well funded, and the board also, as shared by both Nagesh and Vijay, has deliberated options of capitalizing the company as per its requirement. So there is a lot of things happening, and the board is extremely cognizant of all these matters on hand. At the share price level and investor relation, what I would like to share is we keep on engaging with the investor community. We have been giving regular updates of the developments at both the organizations, and we have been continuously engaged. Share price is a reflection, and we believe that our continuous financial performance improved with the growth story and the margin improvement journey will surely, over the next few quarters, reflect also in the share price. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Kenil Mehta from Omkara Capital. Please go ahead.
Hello. So I wanted to know, can you give a brief roadmap or guidelines on the EV business, and what will be your focus area, as we have seen the volumes of two-wheeler business has decreased, but the volumes of three-wheelers has increased, and overall the three-wheeler market for EV is also increasing. It has touched 4 lakh vehicles per annum over last year. So should we expect the volume setback in the two-wheelers to be set off by the three-wheelers in coming years, or the two-wheeler volume will also go back to earlier levels of 2 lakhs per annum?
Okay. Thank you so much for your question. So, we are one of the leading players who are operating across the last mile mobility solution, which is the two-wheeler, which is the L5 and which is the L3. I'll answer or take up each of your questions for each segment first. If you take two-wheelers as a brand, Ampere has been in the market for 15 plus years, and we are predominantly known and loved as a brand in the middle segment, which is the family-oriented segment, and which is where the bulk of the industry is sitting. So we have launched Nexus, which we call it India's first family scooter, high-performance family scooter, and it has been seeing a lot of traction. You have to see the product to believe it, in terms of the build quality, in terms of the fit and finish, in terms of the technology, which I mentioned when I started the call. It is overall comprehensively a very well-built vehicle, which will be able to compete in the middle segment, I would say the high-speed segment of the Indian electric two-wheeler market. As you rightly mentioned, we see in the next 3 years the two-wheeler industry in itself growing, and the segment share of electric two-wheelers growing in that proportion, and we working towards new products with our 3 leading brands, which we call it 4 rather, NXG, which is the Nexus, Magnus, which we are working on certain new product developments in our next discussion we will be able to showcase, and then Primus and Rio. So we are, I think, very well poised from a product, technology, brand, and a distribution standpoint to gather and increase our market share. Coming to the L5 three-wheeler segment, you are right. The market has grown in the last 2 years, and with Electra, the electric three-wheeler which we have launched, our product has a key USP which we have demonstrated that it delivers the maximum range and on a single charge in that given category. We are seeing a very good response. It's very initial phases where we are just opening up production and building out distribution across the country, but we believe that we will be able to increase our market share. We are already in the top 5 when you look at the Vahan data for L5, but I think there is an headroom available as we have not started distributing, selling and building the volumes across the country. On the L3, which is our LE brand, we are working on building out new products. We already have 150 plus distribution across the country. We have a strong play in the northern and the eastern states of the country, and that industry has also grown in the last year or the last 18 months, I would say, and we foresee a good play there. So it's a comprehensive product mix in the last mile mobility solution where I think Greaves Electric Mobility is very distinctly positioned as compared to the market and the other operating players in the segment. Thank you so much.
And also, sir, can you specify what will be the roadmap for our Greaves retail business, which has grown substantially from 50 crore revenue to approximately 500 crores in last 3 to 4 years? So what will be the roadmap on the revenue guidance and the margin uptake?
Can you repeat your question?
There's a little bit of background noise. Could you please repeat your question?
Can you give a roadmap or a guidance on your Greaves retail business, which has double over last 3 to 4 years from your FY21 base from 250 crore revenue to 500 crores, 550 crores? So what should we expect in coming years? Should it be the growth driver further, or the revenue growth will slow down going forward?
Yeah, I won't be able to talk about the future, obviously, but I think as you would have seen from my previous analyst calls and also in the call that I did before, we are moving the portfolio to newer growth areas very consciously. So from a portfolio that was primarily doing the three-wheeler diesel aftermarket segment, we have moved into newer areas. We are now fuel agnostic, so we do CNG parts, we do petrol. Increasingly, the company is moving towards newer growth areas such as EV components and parts for the aftermarket. It's a very, very growing area. We are also looking at, we've also launched parts on the construction equipment line catering to specific applications around mining, road building, commercial building construction. All this means that we have a very comprehensive suite of products for the aftermarket. And we have also strengthened our distribution, as I mentioned, both in India as well as overseas. So we have all the sort of the growth, underpinnings for the future.
Also, sir, in the Greaves engine business, if we compare your FY19 to 20 base, your non-auto segment had a 70 to 80,000 volume, then it thereby decreased 30,000 volumes, and now it's steadily increasing. Should we expect the same level of volume in coming year? Non-auto.
So this is Arup Basu. I'll try and respond to your question. The non-auto, while we call it a segment, it's actually a very large portfolio of applications. It includes various small engine applications in boats. It includes applications for fire pumps. It includes gensets and a whole host of other prime mover applications where there is an engine or some engine driving the mobility or the movement. Now, what we have been doing over the last few years is to look at that portfolio in terms of the mix of applications and products that we have. So the right way to look at it would be to see whether our applications are growing, whether our mix is growing, and whether our performance in terms of the profitability of the areas that we play. So the demand in all this together is going to grow. That's for sure, given what's happening in the Indian economy. And so we ought to be chasing that growth and be a serious participant in that growth. I hope that helps.
Understood. No question. Thanks.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Yes, hi. So all these the transformation journey that is taken along with investment in growth areas across all the businesses. So on a consolidated level, FY25, can we expect it to be profitable? So do you have directionally, what should one expect overall for the company?
Hi, Rahil. Can you please repeat your question because it's not clear? I mean, what exactly is the question that you're asking?
Let me jump in. I think Akhila, the question is console profitability in the next year. As you know, Rahil, we do not get into forward guidance, but the CFO can add to that, if you want to give any additional input.
Sure. Thanks, Nagesh, for that. So, Rahil, if you were to look at it, even FY24, we have given at a consolidated level, the EBITDA and the operating PBT are positive. We have had a challenging year with Greaves electric mobility, which, as I mentioned earlier, we have been very transparent both with the investing community and the government and shared our representations, and therefore we continue to be committed on that line. As explained by Vijay, we are having a very strong product portfolio roadmap, and we believe strongly in the future prospects of the company. I hope that answers your question.
Rahil?
Yes. Thank you, and all the best.
Thank you. The next question is from the line of Bhavesh Patel from Patel Investments. Please go ahead.
Thank you for the opportunity. It was in the similar line in terms of outcome of the transformation, so I get that answer. And do want to compliment the board in terms of increasing the dividend, and hopefully not a forward-looking, but just a confidence from you that with the increased performance, shareholder benefits would continue to accrue to us.
Thank you for your comments.
Thank you. That was the last question. I now hand the conference over to Mr. Nagesh Basavanhalli for closing comments. Please go ahead.
Thank you all. I think let me do a quick summary. Starting with the Greaves engines part, I think what we discussed today was from a diesel engine company which was catering to 400 to 500,000 type of a market. Now we are in diesel plus CNG plus electric, right? On the auto side. Then we started talking about the non-auto side and the non-auto engines. And if you look at the volumes, there has been a volume growth year on year, 26% on the auto side, 13% on the non-auto side. Point number one. Point number two, in addition to that, export business has started to increase. That was covered in Dr. Basu's, right? Point number three, component business, where our focus on manufacturing, supply chain, and profitable delivery of that has started to happen in the area of casting, precision, machining, forgings, etc. Bottom line is, I think traditionally we have looked at number of engines, but now auto engines or diesel engines, you should be looking at us as the diesel engines, fuel agnostic engines, non-auto engines, component. That is how our factory utilization is happening, and that's where one of the revenue stream is coming. Point number two, Excel. Excel was an acquisition which has grown year over year, and that number I think was shared. It's also coming at a 30+% PBT. It's got global customers. 40% of its business is exports. It also expands the horizon from last mile mobility to now dealing with construction majors like JCB and heavy truck and heavy bus majors like Daimler, Caterpillar, JCB, Scania, etc., etc., etc. So the expansion of the marketplace has happened, and the product or the component engineering play has happened, leveraging our engineering capability. Now let me get into GR. Greaves Retail, Narasimhan has talked about spares plus service plus retail, and how in the spare side, in addition to the auto side, they've gone into fuel agnostic play, and they're also getting into certain other adjacencies with construction. We touched upon it. Leveraging our tens of thousands of mechanics and retailers pan India, they've built a digital infrastructure which connects how we're moving forward. So that is the story there, and combined with the digital infrastructure. The overall engineering in the retail structure has also transitioned from a skill level from a mechanical only, diesel engine only, to mechatronics, electronics, and sensors. That's what Dr. Basu was touching upon earlier. Now coming to the last point, the Greaves Electric Mobility, the CEO talked about two-wheeler and three-wheeler. They're also into B2B and B2C. And they talked about how the market is looking at some of the newer products. All in all, I believe that the CFO said at 366 crores, it was one of the highest PBT that the company has registered and for the last year. And we will continue to keep, the team and the management will continue to keep working on all of this, expanding and multi-pronged and multifaceted revenue stream. Thank you all for your attention and your time today. Have a great day. Thank you so much.
Thank you. On behalf of Greaves Cotton Limited, we thank you once again. Stay safe. With this, we conclude this investor call. Thank you for joining us, and you may now disconnect your lines.